This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus oil producers are scheduled to meet on June 2nd to decide their next output policy steps, including whether to extend voluntary production cuts totaling about 2.2 million barrels per day, BPD, which expire in the first half of 2024. These voluntary cuts from the OPEC Plus come on top of earlier reductions of 3.66 million barrels of oil per day that were announced in various steps since late 2022 and which are valid until the end of 2024. Total pledged cuts therefore currently amount to 5.86 million barrels of oil per day, equal to about 5.7% of daily world demand, according to Reuters calculations. The latest 2.2 million barrels of oil per day round of voluntary cuts was announced by the individual countries on November 30, 2023.
Oil prices rose about 1% on Friday, but fell for the week on worries that strong U.S. economic data would keep interest rates elevated for a longer period, curbing fuel demand. The Brent crude July contract rose 76 cents to $82.12 a barrel. The more active August contract closed up 73 cents at $81.84. U.S. West Texas Intermediate, WTI, crude futures settled 85 cents, or 1.1%, higher to $77.72. On Thursday, Brent closed at its weakest since February 7th and US WTI futures at their lowest since February 23rd.
Moving on to the top news in the energy sector.
Solar farms generated less than 6% of the electricity produced by utilities in the United States in 2023, but that annual share vastly understates the critical role that solar plays in enabling power firms to accelerate energy transition efforts. On a day-to-day basis, solar plants can have such disruptive influence on system electricity flows that utilities have been forced to develop capabilities to rapidly curtail output from other sources and store surplus power for later use. In turn, that resulting agility and emerging ingenuity throughout the energy sector is helping to accelerate global energy transition efforts by forcing power systems to more efficiently accommodate large swings in clean power output.
Expanded sanctions on Russia and enhanced pressure on countries that Moscow considers friendly are hurting Russian firms' export revenues and creating oil payment issues, the Bank of Russia said on Friday. The United States has hit Russia with waves of Ukraine-related sanctions and threatened secondary sanctions on foreign banks aiding transactions with Moscow. That has prompted some Chinese banks to limit dealings with Russian companies. The widening of sanctions and pressure on friendly countries leads to companies' reduced export revenue, the central bank said in a report on financial stability in a section titled, Main Vulnerabilities. Next, we have the top news in metal markets. China plans to buy up to 15,000 metric tons of cobalt metal from local Chinese producers over the next few months for domestic stockpiles, three sources familiar with the matter told Reuters, adding that it would be a record amount for a single purchase. The planned purchase would be a big increase as industry sources say China's state stockpiler, the National Food and Strategic Reserves Administration, bought 8,700 tons of cobalt metal last year. China dominates the processing of cobalt, most of it from the Democratic Republic of Congo, where it is a byproduct of copper output. In metal form, it is used in the defense and aerospace industries and also in magnets for communication.
Copper prices dropped on Friday as worries about higher interest rates and soft physical demand in China curbed the appetite of investors who had sent prices to record highs. 3-month copper on the London Metal Exchange fell 0.8% to $10,331.50 per metric ton by 1600 GMT. The rally will likely continue in the medium to long term, but in the short term we have to respect the fundamentals, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen.
We will now look at the top news in the agricultural sector.
The condition of French soft wheat declined slightly last week to remain at a 4-year low while maize planting slowed, data from Farm Office France Agri showed on Friday, as rain returned to crop belts. A warm, sunny spell 2 weeks ago had helped crops and soil dry out after a damp growing season in the European Union's biggest grain producer. But showers last week and this week during unsettled weather have raised concern that persisting wet conditions may damage maturing wheat and barley while preventing farmers from completing maize planting.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.